Okay. Okay, I think we shall start. Okay. Welcome to Module D. Okay. So now this is my turn to deliver this seminar tonight. So you hear me all right? Okay. Okay, thanks. On behalf of Executive Training Company, so I welcome you to the, I think it is the 4th seminar on Module D. So you probably have actually attended some of the previous 3. So tonight we are having a seminar on some of the past papers. I did not ask HKICPA to print you any handouts because I've already included in my PPT. So I hope that's fine, okay? Now, I don't have much to write, okay? I normally have a lot of things to write, but I decided to use the PPT all the way through. So if you have any question to ask me, just raise your hand, okay? And if I speak too quickly, so you can stop me, okay? So let me introduce myself. Okay, my name is Fiona Lam. I'm the Managing Director and the Principal Lecturer for ETC Training. So I'm responsible for teaching MC and MD. So generally I'm a practicing partner of a medium-sized firm. So I've just come from my central office, okay, to here, JPC. I've been delivering seminars for HKICPA for a very, very long time. So you can actually visit HKICPA's website. So there are many of my seminars delivered by me. So you can actually, if you are taking, I don't know, 2 papers, okay, if you are taking MC and MD, so you can actually go and have a look in the seminars. So I actually took the QP many years ago. It wasn't my first, okay, it wasn't my first exam. My first exam was the ACCA and the AIA. Then I took the QP in order to gain my PC certificate. So when a long days ago, so I started my teaching around 8 years ago, after I got qualified from QP. So from there on until now, probably I taught about 3,000 students at least. Okay, so I hope I can give you more insights about the QP. Okay, not actually Module D, but also the whole QP process. Okay, always I believe that if you go on the right track, you don't have to retake any examinations in QP. If you're on the right track and got the correct exam techniques, okay, so you can just go away. But if you're on the wrong track, okay, so you will probably need a lot of time to reschedule all your stuff, okay, before the final examination. Now, tonight, the allocation will be like this. We will be talking about the examination technique seminar, okay, on specifically section B, the essay and the short question part. Now, they've told me to include December 2010 and June 2011, okay, the past paper. Now, for my insight, I think for June 2011, because the topics have already been examined, so I will actually give you a list of expected topic lists that I think it will come out in the coming December 2011. Okay, instead of just focusing on June, because all the topics have been examined already. So, and also I will talk about the examination techniques on section B. Some of the candidates will tell me that sometimes they would prefer to do section B first, okay, rather than section A. Because section A, it is a case. You need a bit of time to get yourself really warm up in the examination. So some candidates told me, okay, why don't we start on section B? This is correct. This is an alright approach, but be aware, but don't overrun, because you really need 1.5 hours for section A. If you really overrun too quickly, or if you have overrun too much in section B, okay, then you will have leave like 1 hour for the case, then you will probably muck up your examination, I can tell you that. So, and also there are writing skills for short questions as well, okay. So I think the problem is for my students, okay, they've told me that, okay, I understand the topics, I understand the section, I understand the Module D topics pretty well, but they couldn't write it out. They couldn't put the correct answers on the answer papers. So that is a problem as well. So let's discuss this and how we can actually polish our examination skills. So you can actually apply your examination skills in all over module A, B, C, D, and as well as final examination. So I tell you what to do that, okay, from my experience. So what are the crucial factors and the crucial techniques that you need to pass module D? Now, a lot of students would ask me, do we really have to quote sections? And do we really have to quote the cases and the DIPN? There are so much, right? From my point of view, if you expect to get a very guaranteed pass, okay, I think you really need to write the sections out. Okay, so you have to do that, especially the ones that are very important, like the charging section, like section 14. Okay, imagine yourself in the examination or in the exam paper, you haven't written section 14, then you've come out, okay, without writing section 14. I think you've got some problems, right? Like section 16, the general deduction rule, there is no way that you can skip this, okay, in the examination. So this is very crucial. And for the DIPN and the cases, for the cases, I've decided when I teach my students, MD students, I normally ask them to just quote the name of the case beside the keywords. Instead of quoting the case facts, there's no point doing that. Okay? From my point of view, if you are reading the CLP, you don't really have to learn, okay, the cases by year, by the name of the taxpayer. It is irrelevant. There's no point. The common mistake would be you are describing the case or something like that. It's not necessary. And some of the students say, okay, I can quote for operation test, I can quote 5 cases. No point. Okay, you only get 1 point if you are quoting the case correctly. So I will choose the shortest name of the case. Yeah, you normally write 5 cases names. What's the point for doing so? So I will write that, and you really need to show the examiner that apart from copying, okay, the theory, you really have to apply. You really have to apply in the case. But how can you do that in your answer booklet? If you want to show that you are applying, how can you show that? If I were you, I will actually open a new paragraph, okay? Use some wordings to demonstrate to the examiner that you are actually applying, okay? So what would I do is I quote the theory, then I will start a new paragraph, and then I will use the wordings such as applying to the case, the taxpayer will blah 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 blah, I don't know, okay? Or in the case, or in the question, I will show the examiner that I'm starting to apply instead of just copying theories from the CLP. Now, also give a conclusion. Now, a conclusion is not a definite conclusion, I always say, because in the examination you only get a very little facts. Okay, so you normally have a lot of gray areas. That's why it is important that you give arguments. So you need to give some good assumption, meaning that, okay, assuming that there is a profit motive, okay, I will say that this is a trading profit. So I will actually say, I will suggest this is either probably taxable or it is either probably deductible. If you are not giving a conclusion, you are not answering the question. Okay, the question asks you if it is deductible, and you have quoted loads of cases, loads of sections, but you are not telling the examiner at the end, you are not telling the examiner that's whether it is deductible or not, so you are not answering the question. So I believe that the conclusion will give you at least a mark, right? And also count your marks. What do you mean by count your marks? Sometimes when I mark my student scripts, okay, expecting a 10 marks question, okay, the student will only give me half a page. So that is not really enough for half a page for 10 marks. Okay, no matter how he has written so quickly or what, I cannot give 10 marks because this is too short. Okay, there is no definite format, but at least for a 5 marks question, you need to write at least around 7 points. Okay, 7 points. Why? Because imagine if the points that you have stated, okay, does not match with the marking scheme. So you will not get 1 mark. Maybe you only get half a mark. And what happens if the answer does not match with the marking scheme? You get no marks. So it is not that good. Now, you need to present your answer in a very logical manner. Okay, what do you mean by logical manner? Meaning that at least you need to quote the theory, at least you need to quote the application. Tell the examiner what kind of tax evidence you need in order to support your arguments. Okay, I will tell that later, how to expand your answer, okay, in order to pass. And also use assumption. Why do we need to use assumption? There are very few facts in the question. There are loads of facts that are not available in the question. You need to raise out yourself. So you need to suggest what kind of assumption, what kind of tax evidence do you need. So in order, it is not difficult to expand your answer. Okay, it is not difficult. The problem is whether you can write in a logical manner, whether the marker can actually feel that you are logically answering the question. Okay, so I think this is some of the expectations that are expected from the students. Now, for a good answer plan, what I mean a good answer plan. Now, I've actually used this step 1, 2, 3, 4, 5, 6, okay, whatever, when I am teaching my Module D. Now, at least you need to tell the examiner whether it is a profit tax, a salary tax, is a property tax, or does it involve stamp duty. Now, be careful of the spelling first. Okay, this is very important. We got an S after profit. Okay, so sometimes I always mark my scripts without the S. Okay, it's a very general spelling mistake. Now, you need to tell the examiner whether we are talking about profit tax or salary tax. Okay, whether both. Now, imagine in the question, if it is asking you tax implication, it is always asking you this. Then it is not asking you just profit tax, it is asking you tax implication. Then you might have to think about stamp duty as well, right? Now, there's a there's always, when you talk about profit tax, okay, especially the question, it is always asking you about either property or security. Okay, there's not much business to do in Hong Kong. Okay, a lot of property cases, a lot of shares. So it does involve stamp duty. So imagine profit tax and stamp duty are together. Okay, the second one is salary tax. Okay, salary tax is about an individual or husband and wife. Then it is related normally to a property tax. Why? Because if you are having a property and you are receiving actually rental income, then you will have property tax. Okay, this is about individual. So don't miss any part in the question. Now, another thing is you need to think about whether it is income or expense. Income, we are talking about whether the income is taxable. Expense, we are talking about whether the expense is deductible. Okay, so two wordings are different. Now, does it mean that the income is taxable? Does it mean the expense is always deductible? The answer is no. Okay, if you are telling me that okay, the income is taxable, then the expense must be deductible, the answer is wrong. Okay, it's not necessary. So you must, at least for income, you must follow the charging income, the scope of charge first. And the expense, you need to go through the deduction rule, the general deduction rule. So this is the minimum that you have to know. So if you consider the charging section, then what kind of DIPM are you talking about? Okay, what other cases are you talking about? So this is important. Then after you quoted the correct theory, then you start a new paragraph applying to the case. Use the subject taxpayer. Don't just write the taxpayer shall be obligated to notify. Don't use the word taxpayer. There is a subject taxpayer in the case, i.e. Mr. Chen. or i.e. The company. Okay, that must be a subject. So you are actually applying to the case. Now, there are a lot of different applications under different assumptions. Okay, so you can use the word if. Okay, you can use the word if. If the taxpayer, okay, is a non-resident, then what happened? If the taxpayer is under foreign employment, what happened? Okay, so imagine if you are quoting all the if, then your answers would be enough. What happened to the MD students is sometimes the MD students would only quote one assumption, okay, without quoting all the possibilities. So your answer will be very, very short. Your answer is not long enough. So that is important. Okay, what happened is, okay, I have already put everything in my answer that I can think of, but it's still very short. Then think about what kind of tax evidence are you going to give to IRD. Okay, because IRD is using totality of facts approach, and you have the obligation to give the evidence. So you can suggest anything. Okay, basically like bank statements, lease agreements, or you can actually quote any advertisement or any board of directors minutes, anything, okay, in order to show that you are actually submitting tax evidence. Okay, so this is a way that at least you need to tell me, okay, what kind of tax? Is it income or is it the expense? Quote the charging section, start a new paragraph with applying to the case, okay, and give the evidence, give tax evidence in order to support, and also what kind of assumption are you going to give, okay, to the examiner. So imagine the case, in the case facts, there will be other facts that you need in order to claim, okay, in order to claim your view. So I think this is a way that we should actually show this examiner some of the examination techniques. Now we start with a past paper section B. So I did not actually just copy, okay, I did not just copy the notes, okay, from exactly from the past paper. So what I have done is I have arranged my PPT in order to show you what I think what you should do in the examination. Now the first thing is, for example, question 5. Okay, question 5 is the first question started in section B. Now you would always read the question first. Okay, I think most of the tutors would have told you that you have to read the question first. But you forgot to do something, is to analyze the question. Okay, now for the first thing is when you go into the examination hall, okay, you start reading the whole paper, including section A and section B. Read all the questions first, okay, and identify what are the questions are asking about. What sections would you think of, okay? At least you will know the question, whether it is a salary tax question, whether it is a profit tax question, okay? You don't have to do the question in sequence. You don't have to do that, okay? So you can actually skip question. Okay, imagine I answer question 5 first, then I can answer question 7. I don't have to answer question 6, okay, immediately. Now, for example, in question 5, okay, advise George on the following, okay, the source of his employment with A Limited. Now, imagine the source of employment. What can you think of? Okay, it is always about salary tax. Correct? If you are talking about salary tax, the source of employment would be the charging section. Okay, would be the charging section. So you quickly have to quote section 8. Okay, so you have to quote section 8 bracket 1. This is the charging section. So you must have written in the exam section 8 bracket 1. There's always one question on salary tax. And then you quote the DIPN 10. Why? Because you need to focus whether it is a Hong Kong employment or a foreign employment. No, I'm not asking you to write the whole answers. I'm just asking you to brainstorm yourself. Okay? When you read the question, you know this is salary tax. You know this is talking about which section. Now, then number 2, okay, A2. the deductibility of the payment made to the U.S. Law Society. Now, we are talking about salary tax and we are talking about deduction. Then what can you think of? The general deduction rule under salary tax. Okay, section 12, bracket 1, the general deduction rule. Now for B, determine the deductibility of the expense, okay, claimed by George in respect of the property. Now you need property. How come we got expenses? Now if you are talking about George, an individual, owning a company, owning a property, okay, then it will be under property tax. Correct? So if you want to deduct some of the expense, you need to think of whether you need to elect PA, personal assessment, or not. Okay? So this is crucial. Now for C, discuss whether George is eligible to elect PA for the year of assessment 2009 and to 2010. Now this is either you can just tell me permanent resident or temporary resident. Okay, these are the only criteria under PA, so you can actually see the marks, 2 marks. Okay, basically just copy, done, nothing you can do. Then you go to part D. Now you can at least see 9 marks, 9 marks question. Assuming that George is eligible for PA election, computes the net chargeable income of George under PA for the year of assessment. So you have to do a computation. But tell me, okay, for 9 marks, how many marks do you think will allocate to be the computation? I will probably tell you the computation will be around 2 to 3 marks. Okay, only 2 to 3 marks. So don't just calculate the computation, get your net chargeable income. You must do your explanation. You must give some explanations. Even if you don't get your net chargeable income correctly, okay, normally under conditions you cannot calculate. Okay, you get it wrong. But never mind, it doesn't matter. Okay, it's only 2 to 3 marks for computation question, for the computation part. Then what you need to do is you need to emphasize on the explanation instead. Okay? So the whole question 5, we are talking about salary tax, income expense, property tax, and then we are talking about PA and a computation. If you're comfortable, do the question first. Okay? Do the question first. Normally for students, I've come up with, they prefer salary tax rather than profit tax. Okay? But I can assure you, salary tax is only 30% of the exam. Okay? Normally profit tax is about 50. So at least you can do this first. At least you get your 20 marks first. Anyway, all the questions are compulsory. Now, so then we read the question. Okay, now the question can be long. Okay, even in section B it can be long. So what should you do? Just highlight. Okay, you should use the highlighter and highlight. I don't prefer highlighter. I don't use highlighter. Okay, in my opinion, what you need to do is you read the question and then you write some of the keywords that you can think of along the indents of the paper. Okay, by the time you have written a few words in the keywords, then you can remember the whole paragraph. Even for final examination, I don't need a highlighter. Okay, when I teach my students, they are very quick. You only have to read once. Then for the second time, you do the question. Okay, let's do it together. Okay, let's practice. Now we are talking about that George is an American. Okay, then what should you put? What will you put? I will put a non-resident. Correct? Okay. On April 2009, he entered into an employment contract with A Limited in New York. Foreign employment. Okay, will you write that? I will write foreign employment. Under which he was employed as a legal advisor. A Limited is a company incorporated in the state of Delaware. Okay, being a leading investment advisor in the United States, A Limited requires a team of qualified solicitors. So at least you know that this is non-resident, foreign employment. Having worked in New York for 2 months, George was seconded. Now remember the keyword seconded. Seconded does not mean that you are changing employment. Okay, you are not changing employer. Seconded means that you're just sending him to Hong Kong. Okay, so the the employment contract would not change. Okay, so to manage its Hong Kong branch from June 2009, during the period from June 2009 until March 2010 31st, George stayed in Hong Kong for 200 days. Okay, for 200 days, what will you think? I will write time basis. I will write time basis. His remuneration for the period comprised a salary of 1.2 mil plus an apartment in mid-levels for which he paid rent, okay, 50,000 in total. Now, what will I say is the salary 1.2 million, okay, this is salary, and then you are expecting, you need to argue about the rental value, okay, whether you can claim rental value. Now, George declared all the relevant income and in the tax return against which he claimed the deduction subscription. So this is the second part, the $3,000 and a professional indemnity fee of $10,000 paid to the US. Now, all you think is about, first thing, 60 days rule. Second thing is time basis. Third thing, you need to think about rental arrangement and the expense deduction. So why do you need a highlighter? You don't need a highlighter. Okay, so just write the keywords next to the paragraph. In addition to his employment, okay, income, George also acquired a residential flat in Hong Kong with tenancy on February 2010. Now, if a individual is actually receiving rental income, then he will be actually subject to property tax. So I will write property tax. George declared rental income of 45,000 and claimed the deduction of his payment of various expenses, including rates. Now, the first thing you can tell me, rates, whether the 5,000 is deductible. Yeah, it is deductible. Okay, instantly you need to click. Now, management fee of 24,000 and mortgage interest. Okay, whether management fee can be deductible? No. Okay, so you will write non-deductible. Just put ND. Okay, along the side. Mortgage interest, yes, PA. Okay, only PA. He also elected personal assessment. Now, George is married with no children, as his wife Mary did not come with him to Hong Kong. Half of George's salary was paid in the US to maintain Mary's living expenses. Mary did not have any income chargeable to tax in Hong Kong. Then what happened is the wife has to elect PA as well. Now, then I will focus on my answer plan. Okay, I will focus on my answer plan. Now, I have actually raised this issue in HKICPA meeting because some of the answers are quite inconsistent. Okay, sometimes they quote the session, sometimes they don't. Okay, so rather they quite fluctuate, okay, from answers from different years. Now, what I have suggested to my students is, I think the best, if you can actually do that, is to quote the charging section. So for this question under employment, I would say, okay, that's why I have actually changed the color into red. Okay, the red ones, the red highlighted ones are the ones that I have added. Okay, that I think it is appropriate to do so. Now, for section 8, okay, salary tax scope of charge, if you are actually receiving, okay, income, okay, from either you are being an employment, then you will be subject to salary tax. You will be subject to salary tax. Under DIPN 10 Gorford case, okay, it is whether you are under Hong Kong employment or foreign employment. Now, for George case, okay, even George employment with outsider A Limited, it has a source outside Hong Kong, but the services are performed in Hong Kong. That's why you're still for George case is still subject to salary tax. Okay, even the employment is with a non-resident company. The services are performed in Hong Kong. That's why, okay, he is subject to salary tax. Whether it is under Hong Kong employment or foreign employment, we will consider that under DIPN 10, the 3 conditions. Okay, George concluded the employment in US. A Limited is a US resident. and then the remuneration is paid in the US, but the most important would be the residency of the employer. Residency does not mean an individual, it can be a company. So residency is the most important. Since the residency is in US, then it is a foreign employment. Okay, this is a foreign employment. So in your answer, I need to actually find out the salary tax scope, DIPN 10, write the three conditions, and you are telling the examiner the most important would be the residency. That's why it is a foreign employment, and you get full marks. Okay, can you follow me? Okay. Now for the A2 part, okay, general expenses, we are under section 12, bracket 1A. Now the deduction for all the outgoing expenses, the first thing is you cannot be domestic or private nature and cannot be capital, but you have to show that it is wholly, exclusively, necessarily incurred in the production of accessible income. I think this definition is good enough. You don't really have to define wholly, exclusively, necessarily. Okay, you don't have to write that. So apply, and then I will start. Okay, remember we should start a new paragraph. Starting a new paragraph, I will say applying to the question, the professional indemnity fee paid, okay, is not really deductible because it is not incurred in the production of the duties. Okay, but just keeping him qualified to perform the duties. So the indemnity fee would not be deductible. And then applying to the case, okay, the subscription paid to the Law Society is also not deductible, okay? It's not also deductible. However, you need to remember there is also IRD concession. What do you mean by IRD concession? Okay, meaning that IRD would allow a deduction of subscription of the legal qualification, okay, for the employment. For example, okay, like my case, I am a qualified accountant under HKICPA, under ACCA, I don't know, AIA, practicing certificate, blah, 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 a lot, okay? I have to pay loads of subscriptions, okay, at the year end. Can I deduct all this subscription? The answer would be no, okay? The answer would be no, because I cannot satisfy section 12. Bracket 1. But under IRD concession, I can actually choose one, okay, such as my practicing certificate, because I rely on my practicing certificate to maintain my practicing, okay, to maintain my practice. So by IRD concession, it is allowing you to deduct this subscription. Apart from that, the answer would be no, okay. Even on my subscription for other professional bodies, the answers would be no. Okay, now for the examination, you need to learn this concession. Sometimes they will call this IRD common practice. Okay, IRD common practice, meaning that even the section does not allow you to deduct or does not allow you to do something. By our IRD concession, they would allow you to claim the deduction as well. Okay, and the retention of such qualification is keeping your current development of your profession. That's why it is allowable. Okay, but for this case, it is not talking, it is only talking about the US Law Society. It's not talking about loads of professional bodies. So in this case, it is allowable as a deduction. Okay, so we have done the salary tax scope and we have done the expenses. Now for 5B, it is about property tax. Okay, we have already, now what I will do is I just focus on the paragraph that is talking about the property tax. I don't have to go all over again to read the question case because we have already done so when we first read the first paragraph. Now it would be the rates paid, okay, would be deductible. Okay, and then you can actually allow a 20% as a statutory deduction for repairs. Even if you don't make any repairs, you can still claim the 20%. It is irrelevant. It is just given to you. Even if you don't have incurred any repair and maintenance. But the actual repairs expenses cannot be deducted. cannot be deducted. The actual expense cannot be deducted. And also, what else can it be deducted? I would suggest including irrecoverable rent, meaning the bad debt. Okay, even the bad debt. When you did not receive your rent, then you can actually claim. And for the management fee and for the mortgage interest, they are generally not deductible under property tax unless you elect personal assessment. Now, question 5C is George is an American, okay? He has resided in Hong Kong for employment, so he has to stay in Hong Kong permanently. So even George is an American, he is still a permanent resident, eligible for a personal assessment. Even if he cannot claim the permanent resident, he can still claim the temporary resident because he is staying in Hong Kong for 200 days during the year of assessment. So that is good enough. Okay? Or 300 days in 2 consecutive years. But for this case, in that year of assessment, he has already stayed in Hong Kong for 200 days, much more than 180 days. So he can actually claim personal assessment. So 2 marks. Now, then you can see actually what you need to do is you need to do a calculation on personal assessment. Now, be really careful for one thing is sometimes the question will not tell you. Okay, if you're talking about husband and a wife, then sometimes the question will not tell you whether you are electing for personal assessment. For this case, it is a very friendly question. It is telling you, okay, we are doing personal assessment. But what happens is if you are in the examination, you have to do a computation, and it is not suggesting whether you need to elect personal assessment. So what should you do? You can actually calculate husband and a wife individually. You can calculate their computation jointly by electing joint assessment, or you can elect husband and wife, okay, personal assessment, and choose the lowest salary tax. Lowest tax, okay? Then you have 3 calculations, okay, and then you will have failed. Yeah? You do 3 times, okay? You did 3 calculations, correct? If you do 3 calculations, then I'm going to choose the lowest one. Then you get 20 marks, but you lost the 80 marks already. You don't have time. So what shall you do, okay? What will you do? You will basically get when you read the question, you already need to know whether there are any personal assessment benefits, okay? Whether there are any benefits. What do you mean by benefits? Benefits meaning that, okay, you will actually pay lower tax, such as mortgage interest is one kind of benefit. Business loss is one kind of benefit. Yeah? Or you can actually claim more personal allowances. If you don't have salary tax, how can you claim the personal allowance? Okay, imagine if I only do business. I don't have any personal allowances that I can claim apart from electing PA. Or if I'm paying a lot of donation, what happened? My donation will be subject to 35% limit. Okay, so I can actually increase my salary base in order to claim full amounts of my donation. Or you can actually see that, okay, or I don't know, either the husband or either the wife, okay, he can actually transfer the allowances not claimed, okay, to another spouse. Then you need to think about whether you should elect personal assessment. If there are no personal assessment benefits, you should not claim per PA. Why? Because imagine the husband and wife when they are included together, when they are added together, the salary base would be much higher. Okay, under the progressive rates, that you have to pay more tax if you don't have any PA benefits. So be really careful. For this friendly question, they've already told you should elect PA. But under other questions, if they don't tell you, you need to think about that before you do the calculation. You only do 1 set of computation, okay, not 3 sets of computation. not 3 computations. It is you will be too slow. Now for this case, what you need to do is you claim the net assessable income from employment, you have the net assessable value. Okay, so we only quote the net assessable income, net assessable value under the PA. So you need to refer to the notes. So we go on to another slide first. Now for this case, since George employment with A Limited has a source outside Hong Kong, we will call this a time apportionment basis. Now even the question, they don't tell you the midnight rule. Okay, they don't tell you the midnight rule. Now for this case, the income would be 1.2 million, times the 200 days, and also divided by 300 days, and add the value of residence. But if I were you, I will quote the assumption. Okay, why can you claim the rental income? I mean rental value. Okay, why can you claim the rental value? You will probably say there would be control over the rental payments. Okay, so you will have any control over the rental arrangement done by the employer. So the value of residence would be the amount of salary. Okay, the 800,000 is the salary, minus the rates times the 10%. Okay, assuming this is a flat, minus the rent suffer. Okay, the 50,000 would be the rent suffer, and less the subscription to the US, and you will get the net assessable income. Then what happened is you need to calculate the property tax. The property tax would be the rental income of 45,000 less the rates, 5,000, 40,000. Then you less the 20% statutory deduction, and you will get the 32,000 net assessable value. Okay, we will get the net assessable value. Now, and for the note 3, in accordance to section 42, the allowable of amount interest deduction is restricted to the net assessable value, of 32,000. Even if you can claim, more interest, even you have paid more interest, it is only subject to a cap, the maximum, of 32,000, because what you have done is under note 2, you have calculated 32,000 instead. So the maximum you can claim would be 32,000. Then you will actually have calculated, the personal assessment by deducting the married person allowance as well, 216,000. Then you get the net chargeable income. Is it okay? So sometimes you will find that under the answer, in the answer, you are missing quite a number of keywords. So I have added the keywords in the PowerPoint instead, under the red color, in red color I have highlighted. So it is what you have expected. Could you follow me? So this is a question that is not that difficult. The problem is sometimes you will get the wrong answer for the net chargeable income. Doesn't matter. From my view, it doesn't really matter. If you get the explanation correctly, you will get the marks. You will probably lose 1 mark out of 9 if you have calculated the chargeable income incorrectly. Then we go to question 6. Now question is, again, you always read the question first, You always read the question first. Now analyze the question first, then consider the relevant sections. So assuming that you are appointed as the tax representative of C Limited, evaluate the offshore claim lodged by C Limited. Note the evaluation should cover both the arguments for and against the offshore claim. If you want to claim an offshore claim, it must relates to the scope of charge. Since C Limited is a company, then you are talking about profit tax. So it is always about profit. The first thing is profit tax, C Limited. Then the second thing is about income. It is about the profit tax scope, and you want to claim an offshore claim. Okay, so you want to claim the income not to be taxable. What shall you do is you need to think about the operation. So I will think about the operation test. So for B, discuss how you should address the arm's length issue raised by the assessor and the transfer pricing methodologies that you may adopt in this connection. Now for this case, okay, what can you think of arm's length? What can you think of transfer pricing methodologies? If I were you, I would think about DIPN, okay, 46, or even section 20. Okay, you're talking about transfer pricing. Then we can relate to the facts of the case. Now it is about talking about B Limited is an electronic manufacturer in Taiwan. Okay, so B Limited is NR. Okay, it's a non-resident. At the relevant times, there was a restriction imposed on Taiwan enterprise, whereas they could not deal directly in mainland China. It is true, okay? For a Taiwan company, it cannot directly. That's why it has to come to Hong Kong first. So in order to circumvent such trade barriers, C Limited established a wholly owned subsidiary of C Limited. So it is 100% owned. So it is C Limited and B Limited are related company. They are related company in Hong Kong, through which, okay, subcontracted parts of the manufacturing process to a factory in the mainland by way of import processing. That's why the mainland factory is a foreign investment enterprise in which 60% shares were held by C Limited. Now what happened is the B Limited and C Limited are actually related, and also the factory is also related to the whole group. So all along B Limited was the only customer. Now be careful of only customer. If I'm doing business, okay, if you are my only customer and you are the company, imagine it can be for the whole purpose of sole and dominant purpose to obtain the tax benefit. If I am doing a business, I should have other clients. Why shall I have only one client? That means that it may have a main purpose of a tax arrangement to get the tax benefits. So you may call this sole and dominant purpose to obtain a tax benefit. Now it supplied that through C Limited all the required raw materials and technology to the mainland factory. For the sake of quality assurance, B Limited also seconded a number of engineers from Taiwan to the mainland to supervise the manufacturing process. In Hong Kong, C Limited neither had any staff nor a permanent office. Now, that's why C Limited is claiming offshore. It is a shell company. Okay, it is a shell company. No staff, no office. Okay, nothing. So it is actually going through C Limited. It engaged a secretarial company to handle various tasks such as receipt and issue of invoice or the transshipment. Okay, it has employed somebody to do it. So it resold the parts of B Limited at a markup 2%, which resulted in minimal profits to C Limited. So C Limited is getting a profit, but a very, very little one. Okay, so after deducting all the service fee paid to the secretarial company, so you need to consider whether C Limited now claim that all of its profit will derive offshore, as the semi-finished products were all produced in mainland, because it has done nothing. No staff, no office. It is just requiring a secretary to deal with B Limited instruction in order to claim the production of semi-finished parts in the mainland. It did not have any office. The offshore claim is now being reviewed by the assessor. The assessor also queried about the markup, because actually C Limited is actually putting a markup, okay, on B Limited, satisfy the arm's length principle. So it is talking about offshore claim and transfer pricing. Now we have three parties here. Okay, we are having the B Limited, we are having the C Limited, we are having the mainland. Okay, now remember that you are under the exam of Hong Kong tax. So always focus on the Hong Kong company. Okay, it is talking about a Hong Kong company claiming the offshore claim. So what shall be the answer plan? The first thing we are talking about profit tax, scope of charge, section 14. The first thing you need to write is section 14, the three conditions. Correct? Okay, so you have the three conditions, meaning that either you are performing a trade, business or profession in Hong Kong, you are actually receiving from the profit from the business or the trade, and whether it is crucial whether the profit are derived in Hong Kong. Now, the most crucial one will be the third condition. It is always asked in the question, okay, whether the profit are derived in Hong Kong. Because only this factor will be causing you to pay Hong Kong tax, so Hong Kong source. So applying to the case, it is telling me that C Limited was incorporated in Hong Kong. Now, incorporation does not mean the source. Incorporation, it does not mean the source of profit. Imagine I am using a BVI company doing business in Hong Kong. Do I have to pay Hong Kong tax? The question is, the answer is yes, okay? Even if I use a Cayman Island company, even I use a BVI company, but I am doing business in Hong Kong, I still have to pay tax, okay? Incorporation is irrelevant. So what happened is we need to see the operation. So it has actually engaged a secretarial company to perform the business activities on behalf of its in Hong Kong. So we can actually tell that it is carrying business in Hong Kong. So we are telling that it is a Hong Kong source profit. If you don't have business, why do you need to engage a secretarial company? Okay? If you don't have to do anything, then you have no staff, no office, even you don't have to engage a secretarial company. But what happened is you are engaging somebody to do some work for you. So that's why you are actually carrying business in Hong Kong. So what else do you need? You should use the operation test. Now, if I quote the operation test, it is always my habit to write Hang Seng Bank case and TVBI case beside operation test. Okay, so quickly you can just get one bonus mark. Okay, don't need to tell me which year is about Hang Seng Bank. Don't need to tell me about TVBI case, which year, what are the case facts. Unnecessary. If you quote the operation test, just quote Hang Seng Bank and TVBI case. You can quote other cases, but it's not necessary. It's too long. Okay, so the board guiding principle is to determine the source of profits. The most important is what the taxpayer has done to earn the profit and where. I think for the whole sentence, okay, for the sentence that I quoted in my PPT, I think you should write the whole thing in full in your answer booklet. Then what shall I do is I shall apply to the case. Now apply to the case, meaning that I start another paragraph. Remember? Okay? So I start a paragraph. Now what happened is C Limited is deriving two things. The first thing is the service income. Okay? It is receiving a service income from B Limited. So the profit which C Limited derived will in the nature of service income. So whether the services are performed. Okay, now there is no evidence talking about C Limited did anything outside Hong Kong because C Limited has actually engaged a secretarial company in Hong Kong to perform the service in Hong Kong. So that's why, okay, there are no offshore activities. Okay, all the offshore activities only were taken by B Limited and the mainland factory. So even C Limited receives the instruction from B Limited, it is still performing some services. Okay, so you cannot say, okay, B Limited gives me instruction, that's why we are sourcing it outside Hong Kong. The answer is no, because under an important case, in-bearing case, all the three companies are dealt on its own account. Okay, you cannot tell me, okay, B Limited gives me instruction, so I shall claim offshore. This is not correct. Okay, because I'm performing the services in Hong Kong. That's why it is Hong Kong source. So according to the case, imagine C Limited arranged the production, okay, for B Limited, and it was such service earned the C Limited its profits. As C Limited did all the arrangement, okay, and the purpose was so to circumvent the trade barrier, okay. So no matter how little C Limited had done, you cannot say, okay, I have just engaged a little bit from the secretarial company. That's why the profit would not be sourced in Hong Kong. Absolutely incorrect. Even a very little work, okay, you have done in Hong Kong, that means the services are performed in Hong Kong. So it is wholly sourced from Hong Kong. Therefore, it is taxable. Okay, so for this scenario, for this part, okay, we have actually revised the service income. For service income, we use the original test, operation test. Okay, we're using the original test, operation test. There is no specific test that we should use, just use the operation test instead. Now, it says saying that the fact, okay, C Limited neither had any staff nor permanent office in Hong Kong, okay, you can still do services, okay, through secretarial company. So whether you have staff or whether you have office, it is irrelevant anymore. Now, for the second part is you can actually claim C Limited is actually generating trading profits. Reason why? Because it is buying something, buying materials from B Limited, add a markup and sell to the mainland. Can you follow me? Okay, I buy the materials from B Limited and sell to the mainland. Then what happens is C Limited may be regarded as having a derived trading profits outside Hong Kong. Why? C Limited purchased, oh okay, I got it wrong. C Limited purchased the semi-finished parts from the mainland factory and resell B Limited to a markup. Okay, so it is adding a markup, it is actually gaining a markup. So we can actually say under the DIPN 21, okay, revised, for trading profit we should use contract effected test. Okay, you must define the word effected. Effected means whether the contracts are actually negotiated, concluded and enforced in Hong Kong, okay, or outside, offshore. So you can say that if under DIPN 21 we use contract effected test, and effected means the three things, either the purchase or sales if effected in Hong Kong would be wholly taxable. Okay, the key point is wholly taxable. You cannot claim apportionment. Very different from service income. For service income, you can claim apportionment. Trading operation, sorry, you cannot. Even if just, you can only say, even purchase or sell effected in Hong Kong, it will be wholly taxable. Now the customer, B Limited, is the supplier, okay? The customer B Limited will be in Taiwan, the supplier will be mainland factory. So if you can actually claim the purchase and sales are effected outside Hong Kong, then the profits, the markup, would be sourced outside Hong Kong. Okay, so you can actually claim purchase and sales of contract are effected outside Hong Kong. Now, for this 6B, okay, for 6B, the arm's length principle. Now, what happened is it is buying something, it is buying a mainland, the semi-finished products from mainland and resold to B Limited at a markup. So it is whether the markup is reasonable, whether the markup is under the arm's length principle. So the arm's length principle requires C Limited to charge B Limited a markup. So under what have done in an uncontrolled transaction, so you can consider whether it is a reasonable return. Now the first characteristic is it is between C Limited and the B Limited, and you can tell the marker it is a related company. Okay, it is a related party transaction. The problem is whether the 2%, okay, whether the 2% is under appropriate transfer pricing methodology, whether the markup it is under arm's length. Now, for the common transfer pricing methodologies, we have a comparable uncontrolled price, we have a resale price method, we have a cost plus method. So we have all kind of these methods. Now, what happens is, as the product involved, okay, the present case is an electronic part, which may have no market value. Okay, we don't have an external market. Then probably we would use the cost plus method instead. Okay, so it is therefore the one which the assessor may adopt will be the cost plus method. So this is under DIPN 46. Okay, now whether the cost plus method is reasonable, the assessor will compare the markup as compared if you have an irrelevant transaction as compared to an individual unrelated party. So we are using a comparison, okay? We can compare with another person, another company. So whether the transfer pricing methodologies, we will actually, if I were you in the case, I will quote DIPN 46. The crucial DIPN 46 is whether the markup is reasonable, whether the transfer pricing is under the appropriate methodology. So I think 6A parts, question 6A, I think this part will be more difficult than the B part. Because for the A part, you need to talk about two things. The first thing would be the service income. The second thing would be the trading profits. And probably you will have left the trading profits, okay, instead. Okay, now for question 7, assuming that you are tax manager of E & Co., which is assigned to handle the case of D Limited, draft an advice letter, okay, accordingly will be a letter format to D Limited, analyzing the taxability, okay, of the compensation. Now we remember there are several things that always ask you, such as compensation, such as exchange rates, okay, if you have gain on exchange differences, it is always asking you taxability. What do you mean by taxability? Whether this income, okay, it must be a compensation received. So whether the income would be taxable or not depends on whether it is capital or revenue. Okay, it is always asked, even for final examination. So you will have received a compensation, normally a lump sum. Okay, so whether the lump sum is capital or revenue. And for B part, the deductibility of the severance payment. Severance payment would be whether it's deductible or not. Whether the severance payment, it is related to your business. Whether it is incurred in the production of chargeable profit. So you can actually claim section 16 bracket 1. And what the possible actions which D Limited may take to reduce its tax liability and relevant statutory requirement which the company has to observe. So what actions maybe IRD, okay, can take on D Limited? Maybe a bit of general anti-avoidance, so we need to see the case. Now what happened is, according to the case, is D Limited, okay? D Limited is a garment manufacturer for many US and European brands, okay? During the year of December 2008, the US brand terminated its manufacturing contract with D Limited, okay? Accounted for 15% of the latter's turnover. Now, after a negotiation, the brand decided to compensate D Limited with a sum of 20 million. So you are the tax advisor of D Limited because of the Hong Kong company status. So you are receiving, the D Limited is receiving 20 million, the compensation. The compensation was decided with reference to the profit which D Limited would have derived during the remaining period, meaning that the compensation is for the uncompleted contract. So owing to the above termination of the manufacturing contract, D Limited closed the relevant production line and laid off 20 workers. The company provided the redundant workers with severance payment of 1.2 million, so we call this severance payment. So you're actually paying the workers severance payments. So in accordance with the employment ordinance, in 2008, D Limited recorded the compensation as trading receipt. However, it did not charge any severance payment as an expense. So the compensation you are going to tax, but the severance payment you did not claim any deduction. What shall you do? So recently, what happened is D Limited had received the 2008 and 2009 final tax assessment and the demand for provisional tax. Both were computed with the return profit for the year of assessment. Now, Mr. X, the financial controller, considered the assessment to be excessive because the compensation and the severance payment are not correctly treated. He engaged your firm, for advice to review the matter. So even the compensation received, you did not claim the severance payment. Shall you claim the severance payment? Now, for the answer plan, the answer plan will be the first thing, letter format, I'm assuming everybody knows the letter format, and then you need to consider whether it is chargeable to tax. Now, what happened is D Limited is a garment manufacturer. The contract with the brand was just only a manufacturing contract. It is using the brand for manufacturing. So if you terminate the contract, the compensation may be regarded as a business receipt in the ordinary course of trading. So it is in the ordinary course of trading. And the contract with the brand only contributed of 15% of the turnover. So it is not affecting the whole framework of the business. So we can call this probably trading, but it is not the essential structure. You are not causing the essential structure. If I'm telling you, if you lose the brand, you are losing like 50%. 50% of the business. Then you are affecting the structure because it is so material. So you need to consider whether it affects the framework. The compensation was computed with reference to the profits, which D Limited would have earned from the contract. Now the compensation, if it is for the profits, you have lost the profit, then you can claim it as revenue. So what happened is examination skills. You should say that if, remember, you use different assumption. If this is for compensation for capital assets, not taxable. If you are causing compensation for the loss of profit, you have actually lost the profit, yes, it is taxable. If it is affecting the framework, the whole structure of the business, not taxable. You have to answer both sides. Not just say, this is revenue, this is trading, and therefore taxable. It's not good enough. No analysis. That's why it is asking you, please give a logical manner. Then what happened is the severance payment. Now the severance payment is deductible. Why? Because it is a liability for the payment through the closing of the production line. It is for the closing. So the severance payment is payable. It is an obligation for the payment that you have to make in order for the retained services of the employee. Meaning that if I were the employer, when I hire you, I need to give you severance payment. If I put you into redundancy, if I terminate you, I need to give you the severance payment. Now this is severance payment already expected, when I hire you. So it is part of your package. So I should actually can deduct okay, I can actually deduct the severance payment. Okay, imagine your employer, okay, I don't mean he wants to lay off you tomorrow, okay, but at least when he hires you, okay, he hires you in under your employment contract, it will say, okay, if I lay off you today, I need to give you 1 month notice, right? Okay, so that's why it is already expected in the contract. So you are talking about that, it is expected, so that is deductible. Now for C, what shall the company do? The first thing is you should, if you receive the assessment, okay, now be aware the assessment is not giving you any dates. It is open. You don't know what date. You have no idea what date. Then what should you do is you need to suggest all the possibilities. Imagine you receive the assessment today. You have 1 month to raise an objection, correct? Okay, so if you raise an objection, it will be under section 64. Okay, the objection must be in writing. You must state the grounds of the objection. Okay, so you need to tell the assessor that severance payment has not been deducted, which should be deducted from the company assessable profit. And it must reach the commissioner within 1 month after the date of the notice of assessment. Okay? Now, you don't know whether you received the assessment on what date. So you assume, okay, you can assume that it is within that one month, then you can raise an objection. What happened after 1 month? Okay? After 1 month, the time limits for the objection will be 1 month. After 1 month, the assessment would be final and conclusive. Okay, it will be final and conclusive. Then, if I want to tell you that after 1 month, I want to open the case again, I want to open the file again, can I do that? Okay, you can only do that by under section 70A. Okay, meaning that the company can apply what we call error and omission claim. Okay, so after you open that, you need to state the grounds. Okay, that there is an error and omission claim in the statement. Meaning for this case, you have omitted to claim the severance payment. So apply to the case, you have failed to recognize the severance payment, so you can actually apply section 70A. Now there is a time limit for the application. It is within 6 years after the end of the relevant year of assessment or 6 months after the date in which the relevant notice of assessment will be served, whichever is later. Now you would have made a mistake if you only just say objection, because it does not tell you the time. Okay, even if it tells you the time, you can still elaborate that after, okay, you have 1 month to raise your objection. If your objection is not received within 1 month, it will be final and conclusive. If you want to reopen the case, you can only do that by only applying section 70A. Okay, by claiming error and omission claim. Now some of the students may be confused. Okay, if you are within the 1 month, if you want to tell me, okay, I shall claim section 70A, then you are wrong, because you are still within 1 month. You should raise an objection instead. Why do you need to reopen the case? You don't have to reopen the case. You're still within that 1 month. So you should raise the objection. What happened after 1 month? It is final and conclusive. Then you can reopen the case. What do you mean by reopen if it is not closed? Okay, so you need to think about the sequence. Okay, the sequence of your answer. The most tricky part is this part will be you did not mention section 70A. Okay, it is not that obvious because it did not quote you any dates. Okay, it did not quote you any dates, so it is not that obvious that you can actually open the case under section 70A. But you need to tell the examiner that after 1 month it will be final and conclusive. If you want to reopen it, it will be necessary if you can show error and omission. Okay, so it's we still got, what shall you do is basically, okay, you can, if you raise the objection, because you're paying more, you forgot to deduct the severance payment. Okay, if you claim the severance payment, then imagine the application of holdover. We always tell this, think about as a lump sum of question, a lump sum answer. Okay, imagine you raise the objection. Imagine you raise the objection in dispute. You need to apply a holdover. For this case, is the contract with the brand is 15. The percentage will be 15% of the turnover. So you assume there will be a drop in assessable profits. Okay, so it will be not more than 10% for the year of assessment. So the compensation will be one-off. You are expecting the profit will drop. That's why you want to hold over the provisional tax for next year. Okay, so if you want to apply for that, you can do that by a deadline, okay? Making such application. So you have 28 days before the due date for the payment of the provisional tax, or 14 days after the date. So it is just copying. But what I think you need to think about is, first thing, if you're not happy with the tax assessment, object. Whether within the time limit, okay? If you are after 1 month, final and conclusive, think about after 1 month whether you can reopen again. Okay, if you say, okay, I forgot to raise an objection, sorry, you cannot reopen. For reopening a case, it is only under error and omission. Okay, you're not showing error, you're not showing omission. Why shall they give you to open the case? Okay, so you need to think about that, and then you need to apply the holdover. Okay, imagine the objection in dispute. Imagine the money that you receive next year would be much lower. Okay, would be lower than 90% of this year. So you can actually raise a holdover. Okay, so this is sort of, I call this a package for the answer. Okay, give everything. Now, after December 2010, okay, so you need, what I'm talking about is the first thing, okay, what shall you do? What kind of taxes involved? The first thing is profit tax. Profit tax is in your exam at least 50%. So if you are talking about that, okay, I'm not going to revise profit tax, then don't go into the examination hall. There's no point. Then what happens is salary tax, assuming around 30%, okay, around 30%. Now, most of the students really like salary tax, but I can tell you, don't put too much time on salary tax and forget about profit tax, okay? It will kill you if you just put all the effort in salary tax. And then others, 20%. So you got different things like stamp duty, you got tax administration, you got China tax, you got property tax. Okay, so you got all this. So, and then you need to think about income or expense. Okay, income, profit tax income. We got section 14(1), we got DIPN 21, we got operation test, and we got deeming provision as well. Okay, all this relate to the profit tax income, and you must have your notes ready for these sections. Okay, now for profit tax expense, this is section 16(1), general deduction rule first. A lot of students forgot to quote this. If you have the specific deduction rule, such as, okay, giving example, if I'm talking about interest payments, the first thing you need to write is general deduction rule first. Whether you have borrowed the loan for the production of chargeable income. Okay, if I am borrowing a loan, that is not, okay, that is not for the chargeable income. The first criteria is not satisfied, you don't have to talk anymore, okay? You don't have to go further. So the first thing is the general deduction rule, whether it is in the production of accessible profit. And the second thing would be the specific deduction rule. Not every expense has specific deduction rule. For example, legal expense, we don't have specific specific deduction rule. We just use the general deduction rule. But for interest, we have, okay? Interest, we are having section 16 bracket 2. Okay, you only have to satisfy one of the conditions under that, okay, if applicable. So this is crucial. Now, give the whole set of answer. What do you mean by whole set of answer? For example, royalties. Royalties is a very, very common topic. Okay, for example, a common topic that worth 10 marks. How am I going to give 10 marks, okay, to the examiner? So the first thing is you need to talk about the scope of charge, okay, section 15 bracket 1b or section 15(1)(ba). You need to know the difference, okay? The second one is whether you can enjoy the 30% or the 100%, okay? Whether you are enjoying the 30% or you have to pay 100%. So what is the tax rate? Then you need to talk about whether the tax administration, who is going to pay the tax. So for the payer, you have the withholding obligation under section 20A and section 20B. Then we need to talk about whether the IP, whether the intellectual property is being used in Hong Kong. We call this Emerson case. So you are giving every single part of related to royalties to the examiner because it is normally worth 10 marks, 8 to 10 marks. Okay? If you just talk about section 15(1)(b), too bad, you get 2 marks, but you won't get full marks. So I always say, count the marks. Okay? For tax computation, you must do the cross-referencing. Okay? You must do the cross-referencing. Meaning that by the time if you have done something addition, if you have done something deduction, you must give explanation and do the cross-reference. Okay, do the cross-reference. Even if you run out of time, you only got 15 minutes left in the examination, don't do the computation. Just do the explanation. Okay, give it a go at the explanation. Forget about the computation. If you do it around, turn around, just do the computation. I forgot all the explanation, then you will have failed. Okay, so you need to be aware of the specific techniques in this way. Okay, so we will take a break first and then we go to June 2011, and if you have any questions about the case or MD, you can just come up. Okay, back to 2011, okay, June past paper. Now section B. Okay, let's see what has been asked in the last diet. Okay, again, we read the question first, it will be easier. Now, it is telling me that question 5. World Corporation is a large international company incorporated in country X. It has many subsidiaries in Europe and in the United States. The group would like to carry out the following restructuring plan. So World Corporation would be the non-resident. Now, what is the requirement? So World Corporation would like to set up a new subsidiary, okay, called New Limited in Hong Kong to strengthen their market position in Asia. Now, New Limited will be responsible for the marketing and sale of group products in Asia. So please comment on any Hong Kong tax implication on New Limited operation in Hong Kong. Now we are focusing on the Hong Kong taxpayer, so it is New Limited. Okay, we are talking about. So tax implication. Okay, watch out for this. Now what it is doing is it is doing marketing and sale of products. So if it is doing so, okay, we are talking about the profit tax scope. What will you say? Section 14. Okay. Section 14. Operation test. Okay. Correct? DIPN 21. Now for B, New Limited will also set up a branch in countrywide to market and sell group products in countrywide. Would the branch profit be subject to tax in Hong Kong? So if the branch is not in Hong Kong, then the central management and control would not be in Hong Kong. So if tax is payable in countrywide on the branch profits, comments on the deductibility under the profit tax in Hong Kong. So we are talking about deductibility, so deduction. Section 16. Now, what is the answer plan? Okay, the answer plan will be, okay, I have also highlighted, if I'm highlighting the blue colors, okay, the blue colors would be the original, okay, the original answer in the model answer. The red ones would be the ones that I have added. Now for 5A, we are talking about section 14. So New Limited is a company incorporated in Hong Kong. It is actually carrying business in Hong Kong as well. So it will be subject to Hong Kong profit tax. Now, it is important that we need to decide whether the profit are sourced in Hong Kong. So we are talking about the locality of profits. Now, the profits derived offshore would not be taxable, okay? So you need to think about whether it is onshore or offshore, or whether you need apportionment. Now, under operation tax again, you need to talk about whether the profits are taxable. Depends on what the taxpayer has done to earn the profit and where. So, operation tax, what shall we quote? What cases shall we quote? Okay, very good. Okay, you see Hang Seng Bank next door. Okay, Hang Seng Bank. Okay, and TVBI case. So as New Limited is responsible, now it is responsible for doing marketing and sale of products. So it is actually doing trading operations. For trading operations, you are talking about effected. Okay, we are talking about contract effected test. Okay, remember it's just like December 2010. Contract effected test, we need to define the words effected. Okay, effected will be like the conclusion and the negotiation and enforcement of the contract. So if the profit are derived from the trading operation, so it will be subject to Hong Kong, in Hong Kong. So it is either the purchase or sales contract are effected in Hong Kong. Now you can see this answer, the answer plan, okay, under June 2011 as compared to December 2010. Both answers are talking about trading operations, but you can see the difference. Okay, sometimes they will talk about contract effected test. Sometimes they don't mention contract effected test. Sometimes they will mention negotiation, conclusion, and enforcement. Sometimes they don't. Okay. What I suggest is you find the answer that is most comfortable to you, okay, instead of just copying one set of answer. So apply to the case, okay, so you can see that the profit from contract effected if offshore, okay, you need to claim whether the purchase and the sales are both offshore, then it will be non-taxable. Now, in order to claim offshore, you need to give supporting documentation. So what kind of tax evidence would you give? Maybe the board of directors minutes, or maybe the shipment, or maybe the financing documents. Just suggest, okay, just suggest. The model answer is not definite. You can suggest more evidence that you can submit to the IRD. And the profit tax rate in Hong Kong will be 16.5 because you're actually introducing to world corporation. Now, and the general deduction rule is whether, okay, the section 16.1, meaning that all expenses must be incurred in the production of accessible profits, except particularly excluded by section 17. So general deduction rule you must satisfy. So this is another answer plan that I can tell you that this is different as compared to December 2010. Okay, but more or less the basic keywords are the same. Okay, like section 14, operation test, DIPN 21, contract effect test, they're the same. Depends on how details they're expecting you. Now for tax administration, overall, okay, if you are setting up a subsidiary in Hong Kong, all the profits would be staying in Hong Kong. Okay, for example, New Limited, if it has derived profit, then the profit will stay in New Limited. Now, if you want to pay dividend, okay, pay dividend to World Corporation, there will be no withholding tax in Hong Kong. There will be no withholding tax. And even the dividend, okay, even the dividend income, okay, it is for World Corporation, it is all the dividend is after, it is paid after the profit after tax. So it is out of profit after tax. So for New Limited, as it is a new company, it has to notify the chargeability under section 51 bracket 2. Okay, it has to notify that there is tax charge, okay, for IRD. So this, you have 4 months after the basis period to notify IRD that you have tax to pay. Now, in order to form a company, you need to pay a capital duty. Okay, we cost 0.1% on the authorized share capital. It does not mean stamp duty, it is a capital duty. What is a capital duty? If you want to increase the authorized capital, then you have to pay this duty, and the maximum will be $30,000. Okay, you haven't transferred any shares yet. Okay, after you issue the shares, if you want to transfer the shares, you have to pay stamp duty. But for new companies, if you want to increase the authorized share capital, it will be only calling the capital duty. So you need to make the difference. You need to know the difference. We call this capital duty instead of stamp duty. Okay, when you start off with authorized share capital for a new company, you pay the capital duty with the maximum amount to be 30,000. Then afterwards, if you want to transfer any shares, then you pay the stamp duty instead. Now, if supporting evidence clearly demonstrate, okay, for 5B, okay, the branch is a separate trading operation and it is responsible offshore activities, then it would not be taxable. Okay, so meaning that the branch is absolutely offshore. It is doing everything, the services, and not involved in the trading operation, so the branch would be offshore. Now, if you have paid tax in country Y, okay, such payment would be deductible under profit tax as foreign tax on profit rather than on earnings. So it will be under DIPN 28. So what does it mean? That you have actually paid an overseas tax, okay, on the profit derived, then it will be deductible. Okay, so if you think about it, okay, it will be a foreign tax profits rather than earnings. So it will be under DIPN 28. So basically the branch is offshore, okay? So offshore, it is nothing to do with your, nothing to do with the profits, okay, onshore. So if such payments, okay, if you have actually paid tax in country Y, there's nothing that is relevant to your profits in Hong Kong. So if such payment, the tax, okay, that will be not deductible. If the payment of the tax, it is related to your onshore profits, then you can actually deduct. But for this case, the branch is offshore. The tax that you paid in country Y is not relevant. Okay, it's not relevant to Hong Kong profits. Therefore, it is not deductible. Now we go on to question 6. Okay. Now for question 6, as the tax rate in country X is very high, Global Incorporation would like to transfer the intellectual property, okay, which it has developed over the years to its subsidiary incorporated in Hong Kong. Now what happened is there is an overseas NR, global incorporation. Now it is because of the country X is so high, okay, it wants to transfer the intellectual property, okay, so it is selling the intellectual property to a Hong Kong subsidiary, okay, we call this Star Limited. Now after the transfer, the Star Limited will be collecting royalties from related companies. Now be careful, this is a Hong Kong company receiving royalties. It is not NR receiving royalties, so you are using Section 14. Okay, you need to be really careful. If you are telling me, oh, okay, we should use Section 15, you are completely wrong. Why? Section 15, we are talking about non-resident receiving royalties. In this case, we are talking Star Limited, which is a Hong Kong company receiving royalties. So we are going back to Section 14. So if you talk about Section 15, oh dear, okay. So for A part, explain the tax implication. Would the cost of the IP be deductible for Star Limited? Now the first thing is, it is Star Limited who is paying out to buy the intellectual property. So it is a deduction, correct? What shall you talk about, the first thing? Okay, I will go for, okay, although the answer is saying Section 16, big E, capital E, I will say Section 16 bracket 1 first. General deduction rule first. If you are not going through the deduction rule, there's no point talking about the special deduction rule. Then it is, for the second part, is if the cost includes the cost of one trademark, would the trademark cost be deductible? So it is actually examining you, what is the difference between patents and trademark? What's the difference? Okay, would there be a difference? You tell me, okay, it is the same, you are wrong. Okay, that is the difference. That's the difference between patents and a trademark. Okay, I'll tell you later. Okay, would the royalties be taxable? Okay, if it is NR who is receiving it. Okay, so discuss how you will address the arm's length issue. Why arm's length again? Remember, okay, this is between global incorporation and a subsidiary. So it is related party. Okay, it is related party again. So would that be an arm's length issue raised by the assessor and the transfer pricing methodology that you may adopt in this connection? So transaction between a resident and a closely connected NR. Now for the answer plan, okay, the first thing is, if you are just acquiring an intellectual property, and the intellectual property, okay, may be argued as capital expenditure, then it will not be deductible. Now what is the difference between a patent and trademark? Now patent is something, a know-how, okay, it's a technical knowledge, okay, it's a technical knowledge. Now trademark can be a copyright or trademark, okay, is a design or something like that. Okay, so what's the difference is, imagine I got an iPhone. Okay, I got an iPhone. The technology relating to making this iPhone is a patent. Okay, it is a know-how, right? How do you manufacture an iPhone? It is a patent to do it. Now, if I'm talking about the logo, the Apple logo, okay, it is a trademark. It's okay. It's nothing to do with know-how. It's nothing to do with insider knowledge. Okay, so we are talking about trademark. Now in Hong Kong, if you purchase a patent, it is deductible. If you purchase a trademark, it is not deductible. Okay, you know the difference now. If you don't know the difference, just remember the words. Okay, purchase trademark is not deductible. Now, if you have the patent or if you have the trademark, okay, you can register. Okay, you can register your patent, you can register your trademark. The registration fee for both are deductible. Okay, the registration fees for both are deductible. Even for trademark. Now, but there is specific rules. Now, for the deduction of a patent, okay, under section 16 big E, the deduction for the patent rights is deductible. But if you are purchasing from a related company, okay, if you are purchasing the IP from an associated company, it becomes not deductible. Okay, do you follow me? Normal cases, if you purchase the patent, it is deductible. But if you purchase the patents from an associated company, okay, anyone related to the company, to the purchaser, it becomes not deductible. Now, applying to the case, open a new paragraph. Okay, if you buying the intellectual property, it is saying, okay, it is supposed to be deductible. However, it is purchasing the IP from World Corporation. Therefore, it becomes not deductible. Could you get it? Did you get it? Okay, so it is not deductible in this case. It is not deductible. Now, the trademark is also not deductible. Okay, it is not covered by section 16 big E. It is not covered by this because section 16 big E, it is just covering the patents. It is not covering the trademark. Okay, under normal circumstances, the trademark is not deductible. But now, under the new IRO, there are some trademarks. Okay, there are some trademarks now deductible, but you need to check with under the IRO or on the IRD website. Okay, there are some trademarks are now deductible, not totally. Okay, there are some, so you can just suggest. Now, since the IP, okay, since the intellectual property will be owned by Star Limited, it is a Hong Kong company receiving the royalties income, we should use section 14. Okay, section 14 saying that, okay, it is not mentioned in the model answer, but I can tell you that if the intellectual property is managed and controlled in Hong Kong, then it would be taxable. So we are talking about whether the intellectual property is managed and controlled in Hong Kong. If you have to pay tax, okay, if you have to pay tax in other jurisdictions about this intellectual property, then the tax would be deductible if it is related to the royalties. If the royalties income are taxable, then the expenses in related to the royalties income would also be deductible. So be careful, okay? This is Star Limited receiving the royalties income. Now for 6B, okay, as I said, okay, if you are bringing the intellectual property as enduring assets, okay, what do you mean by enduring asset? Meaning you are purchasing the asset that can derive some income. Okay, then you purchasing that would be capital in nature and would not be deductible. Now, capital expenditure, we call this section 17 bracket 1C. If you see bracket 17, this means that the deduction, okay, would not be deducted. The expenses could not be deducted. For capital expenses, since the expenses are capital, you cannot deduct. Now, if it's paying to a research and development, okay, expenditure, it should be deductible under section 16 big B. Okay, but it has to make to an approved research institute in Hong Kong. Now, for this case, okay, if it is saying that the payment is to a research company in country Z, then it would not be deductible. The reason is because the research institute is not in Hong Kong, it is not deductible. Now for this question, it is asking you, the first thing is you need to know that's the difference between patent and trademark. Okay, at least you must know this. And the second thing is you need to know the royalties, okay, the royalties income. If it is about Hong Kong company receiving the royalties, then it will be Section 14. If it is about Hong Kong as non-residents receiving royalties, it will be about Section 15. Okay, so you need to know the difference. Now, if you talk about, question 7, question 7. Now, it is talking about, if you go back, go to the question. Now, it is about a person, A person is asking you if there is any way that she can minimize her tax, minimize her tax payments, if she could, so she could have more surplus fund for her trip. Now you need to think about whether you can use some saving, Under administration, you can do the holdover of provisional tax. The problem is whether she can do this, If she can actually hold over the provisional tax. So you need to think about the condition that she can raise the holdover. And B, during ABC annual party held on the 15th, of December, Carol won a cash prize, for $10,000. Now the next day, she also won $20,000 at the lucky draw held at her friend's wedding party. Now in appreciation of her contribution, ABC awarded her a travel allowance, of $8,000 for her round the world trip. So you need to advise whether all these are taxable. So you need to consider whether the items constitute as an income. Now income, we call this Section 9 bracket 1. So you need to think about whether, whether it is taxable in her, for her salary tax. So we go back to what Carol is telling you. Now Carol is telling you that, Carol Smith is employed by ABC company as sales and marketing manager. Her remuneration package consists of the base salary of $20,000 per month plus commission. Now it is not talking about asking you about the source of salary tax. It is not talking you about this. So you need to think that it's $20,000 per month plus the commission. So if her sales exceed the quarter targets of 1 million target sales, she will be paid commission computed as 1% of the sales less target sales. Now the commission is fluctuating. The commission is paid on a quarterly basis, at the end of March, June, September, and December. Now last year, Carol's annual chargeable income was $500,000. Provisional salary tax was computed by reference to the aforementioned amount. Now for the current year of assessment, her bank account revealed the following. Now the salary, got the salary and the June commission. Now for the July to September, another commission. Now what happened is Carol informed you that she failed to meet the sales target, so she did not receive the commission, for the quarter ending September. However, December is usually a good month and she should be able to exceed her targets. Now, she told you, the commission is not received, so Carol will be taking an 8 weeks leave from January to travel around the world. This is because she's able to utilize the leave entitlement. Now, she knows that the due date for the provisional salary tax will be January the 30th. So you need to think about what can she do, what can she do to minimize. So if you think about that, And also apart from part A and B, okay, there's a C part. ABC company is also reimbursing, okay, Carol for the parking fee and fine incurred during her visits to the clients. So Carol has incurred some penalties and fees. Okay, now ABC is reimbursing. So comments whether there is any implication on Carol and for ABC. So you need to consider whether the reimbursement, whether these are the personal or company's expenses. So what should we think of under the answer plan? So it seems to be that the total chargeable income for this year is likely to be. Now for the first thing is the salary, okay? The salary would be like 12 months, okay, $240,000, okay, unchanged. But the commission would be quite different. Okay, the first thing is April to June, okay, she's only able to get 20,000. Now for July to September, she cannot meet the target, so the commission will be nothing. Okay, now October to December, she cannot ascertain. For January to March, okay, she is away. She probably cannot receive any commission. So under this case, okay, she is receiving not quite a lot, okay, only $260,000, okay, plus the commission. So if you think about this, okay, this will be much more lesser, okay, much more lesser as compared to last year. So Carol should be reminded to check the total income, okay, the total income. Probably the income that she receives would be less than 90%, okay, less than 90% of the net chargeable income for the previous year. So she should be able to request a holdover, okay, of the provisional salary tax. So may I ask you, can she hold over the full amount? Okay, can she do that? Holding over the full amount of provisional tax? Probably no. Why? Because at least she got something, okay, she has earned the basic salary and some part of commission. She can probably hold over part of the provisional tax, but not total, okay, but not total, okay, so you need to be aware of that. So applying the case, okay, she probably can claim the holdover, okay, but she has to make this, okay, before the deadline. The deadline will be applying, okay, 28 days prior to the due date for the payments, okay, or 14 days after the issue date of the notice of assessment, whichever is later. So this basically just copy. Okay, this just basically copy. So don't be late for your application, and that's it. So the assessor, what do you think the assessor will do? Okay, the assessor will likely take into account of the total income. Okay, so the assessor will compute whether it is possible to take the holdover. If IRD can challenge, okay, if you are actually making up you're making up the income to give a false, okay, impression of lesser income, IRD can challenge, okay, and seek to impose a penalty under Section 80 bracket 2C, okay, or Section 82A if the actual income turns out to be more than 90%. So don't just make up an amount to be lesser than 90%, okay? Otherwise, next year, okay, if you are showing that you are more than 90%, then you will be challenged by adding a penalty, okay, to your income. So of course, Carol can request for a payment of installment, but probably there will be surcharges such as interest. So for the 7B, okay, 7B. Now 7B is you're receiving a lot of different things, okay, for your salary or for any kind of such as cash prices. Now for this case, cash price, Okay, Carol can argue this is not related to service. Whether it is constituting as the income, you must relate to the service. Okay, you must relate to the service under the employment. Otherwise, it is not taxable. So normally the cash price is not taxable, is not related to the services. The prices that the price at the wedding party is a personal event, nothing to do with the service again, so it is not taxable. However, for the travel allowance, it is related to the service. Because of the service, you got the travel allowance, so it is a perquisite, so therefore it is taxable. Okay, so you need to understand this. Now, for the 7C, for the reimbursement, okay, for the reimbursement, if it is reimbursing the private expense, then by the employer, the reimbursement would be taxable. If it is on behalf of the employer, okay, it would not be taxable. So you need to consider whether it is the own private expense or whether it is a company expenses. For ABC company, the employer, the payments represent the staff perquisites. Okay, these are the expenses, okay, incurred in the production of accessible profit. Therefore, it is deductible. Okay, meaning that the payments, whether the payment is for the staff, okay, the payment for the staff, it is deductible, it is perquisites. Now, for the parking fees, if you are letting the staff to park the cars, of course it is for the company's. Okay, it's for company, so the expenses are deductible. But the company did not ask Carol to make fines, okay? So therefore, it is not deductible under this case. Okay, it is not deductible under this case. Now, according to the question, okay, there should be another part. Okay, there should be another part. I think the question, I think the PowerPoint has missed a part, but never mind. Okay, I can tell you that. Okay, this is probably another question, so this slide is not relevant. Okay, I think that part is not relevant for the. Okay, so therefore we skip the slides. Now what happened is I want to cover some of the what I think, okay, because the questions in section B are very short. Can we go to this slide for the final techniques, which I want to remind you of something that is very important, and I have actually included one of the expected topic list, okay, that I think it is most important. So I want to go through that with you instead. Now, for passing Module D, okay, some final techniques. There's always a common questions relating to commencement of business and termination of business. Okay, especially either in the case is always talking about either you are starting a business. What kind of profit tax issues you can tell me, or what kind of issues that's if you want to start a business, okay, are you going to talk about the scope of charge? Not really, okay. If you want to start a business, normally you will focus on tax administration, okay, a lot of tax administration issues, okay, meaning that this is your first year of your business, so you need to start off with tax administration. You need to tell the Inland Revenue Department that you're starting a business. Okay, so probably the first thing is you will incorporate a company. When you incorporate a company, you will incur a lot of expenses. These expenses are not deductible. Okay, so we call this pre-commencement expenses. Okay, now this topic has been asked so many times. Okay, pre-commencement expenses. What do you mean by pre-commencement? Imagine you have you pay the legal fee, okay? You pay a fee to buy the office. You pay some of the fees for the administration. These expenses are not deductible, okay? But by IRD concession, you can actually deduct some of the rents, some of the salaries, okay, because they are of revenue in nature. So the first thing we are talking about is pre-commencement expenses. So imagine, and also when you incorporate a company, you incur capital duty, okay, because you are actually authorizing. You have the authorized share capital. So you are paying at 0.1%. So the capital, the maximum will be 30,000. Also, you need to notify, okay, maybe you are the employer, okay, you are going to employ some of your staff. So under section 51 and 52, you have taxation obligation. Under section 52, you are having obligation as an employer, okay? So there are loads of issues related to tax administration instead of scope of charge. Now for termination of business, okay, normally in the examination it is more common to ask termination of business. The reason why is normally when you terminate a business, you will probably dispose the property, you will probably dispose the business, you probably terminate your staff. There are loads of profit tax issues, especially when you terminate your business. When you dispose your property, you will consider whether the disposal is subject to tax. So whether it is taxable or not, okay? Because you are disposing the property, okay? So when you dispose the property, you will answer whether it is trading or whether it is capital. You may go back to your original badges of trade. For termination of business, if you sell the goodwill or if you sell the assets, if you sell the goodwill, probably capital, okay, capital nature. If you sell the property or if you sell the plant and equipment, you have the balancing adjustment, okay, you have the balancing adjustment. Or if you terminate your business, you need to get your staff, okay, you need to pay your staff some redundancy fee, okay, or termination benefits, okay, so you need to consider that as well, whether it is deductible. And of course, okay, there are loads of tax administration issues. Okay, tax administration, section 51. Okay, you need to tell the IRD you are ceasing the business, okay, within 1 month. Or you need to keep the books even if you cease the business. So section 51C, bookkeeping records, you need to keep. Now, if you are disposing the property, if you are disposing some of your equipment, okay, so if you dispose the property, it will incur stamp duty. If you are disposing your plants and equipment, it depends on no stamp duty, but you need to consider whether you have ever claimed the prescribed fixed assets, section 16G. So there are many items as well, okay, calling where we call capital or revenue, such as, okay, very common, exchange difference, okay. If I got a gain on exchange difference, whether it is taxable or not, depends it is whether it is capital or revenue. Compensation, as we have actually mentioned before, compensation, whether it is related to capital or revenue. A very common issue to be asked in no matter it's Module D or in final examination. And beware of the implication, the word tax implication and stamp duty implication. Okay? Therefore, always consider if you are disposing the property or shares, consider the badges of trade, whether you need to pay tax. Okay? If for stamp duty, you need to consider whether it is Head 1 or Head 1A, okay? Whether you need to pay stamp duty. And watch out for the most updated cases, okay? The most updated cases are very important. Now, overall, okay? Overall, I have done a big summary for you, okay? If you are preparing your critical file, you can follow this overview hot topics. Now for last diet, I've done seminars for, I did a seminar for Module D, okay, for HTICP. Basically, 99% is in this topic list, okay? So you must prepare. I can give you a list, but I cannot do the critical file for you, okay? So you need to do the critical file. Now, so we go over all these topics and I will ask you questions whether you understand this or not, okay? Now, for the first one, okay, number one, Section 14, bracket 1, must, okay? Every diet, you got this. So prepare your paragraph for Section 14, bracket 1, okay? This is the profit tax scope of charge. So it is talking about whether trade, business or profession. Profession, forget it. It's never been asked. So you need to consider the trade, whether it is carrying on business. So it is normal, but the most critical is you need to say that the three conditions must be satisfied before the profit tax is, you need to pay profit tax. So you need to have three conditions to be satisfied together. And the most, okay, argumentative point would be whether the profit is derived in Hong Kong. This is the most important. So that's why we call this source concept. Number two, we call this locality of profit. Locality of profit meaning DIPN 21 revised. So it's under June 2011, must. You must learn this. There's no way that you don't mention this. Then we call this, okay, IRD would use the operation test. As said, I will quote Hang Seng Bank case and TVBI case. These two cases, always quote that beside operation test. Then you tell me, okay, what the taxpayer has done to earn the profit and where the taxpayer has done to earn the profits. Then we consider the first, okay, the first wording of profit tax, which is called trade. Okay, so always remember it is about the disposal, not the purchase. Okay, purchase there's not much profit tax issue. It is always the disposal, whether the disposal is capital or trading. So we will use the badges of trade. Okay. Quote Marston and Morton case. I will always quote that. It's so easy to remember. Okay, Marston and Morton, that means badges of trade. Badges of trade, we have 6 badges. Does it mean that in the exam we have to quote the 6 badges? The answer is no. If you only have a 3 marks question and you quote 6 badges, you have overrun. The time doesn't sufficient. So what happened is I will choose one badge. I will say, okay, for example, the most important badge would be the profit motive. So I will say, okay, the most important will be the profit motive. The person is considering making a profit in the short time, therefore taxable. Finish. Okay? But if the question is about 10 marks, then you have to quote the 6 badges. It's important, right? Okay? So you need to count the marks and be much more flexible. Then Section 14, bracket 1, whether it is capital, whether it is revenue. If you're buying an asset, okay, and it is and will cost you enduring benefits, you only have to pay once, okay, once for all, and it will last you for a very long time, then it is capital. But if it's, for example, if it is like inventory, if it is trading stock, it will be revenue. Anything related to that asset, it will be either split into capital or revenue. So you must give arguments. Okay? There are gray areas. There are gray areas. You need to argue. Is this okay? Now, the 1, 2, 3, 4, 5 must. Okay? Must be in your critical file. And try to get a good summary. Okay? From CLP, from a source, I don't know. Okay, CLP is pretty difficult, pretty long. Okay, pretty long, I can tell you. I prefer either use Okay, if you're my student, I use my notes. If not, just go to the past paper. Okay, it's easier, it's shorter. Then, number 6, doing business in Hong Kong. Whether the NR, the non-resident, has a permanent establishment. Okay, what do you call permanent establishment? It can be a branch or it can be an agent. We call this IRR 5 bracket 1. Now the NR can set up a branch in Hong Kong. A branch, we call this management and control. Whether you have central management and control in Hong Kong. If the branch is centrally managed and controlled in Hong Kong, then the non-resident is carrying business in Hong Kong. Or if it is appointing an agent, okay, the agent in Hong Kong, it is actually having the general authority to conclude contract, okay, to conclude contract on behalf of the non-resident. It is actually being a permanent establishment. Or the agent, okay, or the agent has a stock of merchandise that is regularly refilled by the non-resident, then it is a permanent establishment. So IRR 5 bracket 1, there are two concepts: branch, agent. Whether the NR is carrying business in Hong Kong through the permanent establishment depends on whether it has set up a branch or whether it has appointed an agent in Hong Kong. Okay, there are two concepts here. Now, what happened is that for the non-resident is not carrying business in Hong Kong, okay, but it is receiving some kind of receipt, such as deemed trading receipt. Then it has to pay tax. Now, meaning that, for example, royalties. If you have a non-resident, okay, if you have a non-resident receiving royalties in Hong Kong, okay, receiving royalties in Hong Kong, you have to pay tax, but not under Section 14. It is under Section 15. Okay. Now, Section 15(1)(a), it is about music. Okay, you have an intellectual property. It is about film. It is related to music. So it is normally not asked. So it is normally Section 1B, okay, bracket B, meaning that the intellectual property is used in Hong Kong. Okay, intellectual property is used in Hong Kong. So you have to pay tax. Now, what happens is if the intellectual property is not used in Hong Kong, then there is an additional way, we call this Section 1BA. What do you mean by Section 1BA is the intellectual property is not used in Hong Kong, but the payer is claiming a deduction. The one who is paying the royalties is deducting the royalties payment. Then the recipient is subject to tax. Now you need to really be careful, Section bracket 1B and 1BA. You need to know the difference. Probably most of you don't know the difference. Okay? The difference is Section 1B is the intellectual property is using in Hong Kong. You need the royalties received are subject to Hong Kong. Now for Section 1BA, the intellectual property is not being used in Hong Kong. Not being used in Hong Kong. But the royalties receipts still are subject to tax. Why? Because the payer, the one who is paying the royalties payment, is claiming deduction. That's why the royalties income still subject to Hong Kong tax. The difference is like this. Now, for Section 21A, is the amount that you need to pay tax. Okay. Now, for royalties income, normally you can enjoy a 30% concession, meaning that's the royalties times 30% times the tax rate. Okay. But the problem is whether you can enjoy the 30% depends on whether the payer and the payee are associated, and whether the intellectual property is ever used or owned in Hong Kong. Now, if you cannot enjoy the 30%, okay, if you cannot enjoy the 30%, that means the payer and the recipients, okay, they are both associated, and the intellectual property has been owned in Hong Kong. Now, the two conditions have to be satisfied together, okay, together, in order to be 100% taxable. Now, if you have withholding obligation, then it will be the resident payer, okay? Section 20A and Section 20B is the same, withholding obligation. But whether the Hong Kong person, okay, the Hong Kong resident company, whether it is an agent or not, if it is an agent, then you use Section 20A. If it is not an agent, that will be Section 20B. So Emerson case is about the word use, okay, whether it is used in Hong Kong. Lam Soon trademark case, it is whether it is the intellectual property is managed and controlled in Hong Kong. So it is more on whether the Hong Kong person is receiving royalties. Now, for the royalties, you must have a very good answer, okay, ready in your critical file. It is always asked, okay. Now, for interest income, okay, we have two. If you want to use the provision of credit test, that means that you are carrying business in Hong Kong, and the provision, okay, of the borrow money is first available to the borrower in Hong Kong. Then you have a source in Hong Kong. Okay. Now, provision of credit test is used when the loan is provided. Okay, the loan is provided to the borrower. Whether, okay, and then you are receiving interest, and the interest is not received from a financial institution. So I always call that a non-bank interest income, okay, for provision of credit test. Okay, provision of credit test is you have money, you have a loan made to a borrower. Okay, you are carrying business in Hong Kong, and the loan is first available to the borrower in Hong Kong. Then the interest income would be sourced in Hong Kong. Now, for the interest income exemption order, meaning that the bank interest income, if you receive bank interest income, then it will be normally exempted, unless you have pledged your fixed deposit as security. Then the exemption order cannot be applied. Okay, normally bank interest income will be exempted unless the fixed deposit is actually pledged as security. Then the exemption order cannot apply. That means that at that time the interest income will be taxable. Now, deductible expenses, Section 16 bracket 1, okay, whether it is incurred in the production of chargeable profits. This sentence you must have written in the exam. There's no way that you have missed that. Now, that interest expense, be careful, okay? Interest expenses, record this, okay? It is pretty important. Now, I think there will be only 3 items that will be most important, meaning Section 16 2C, okay, 2D and 2E, okay? Section 16 bracket 2, bracket C, or bracket D, or bracket E. If you are calling bracket C, that would be a non-bank interest payment, okay, non-bank interest payment. Meaning that you are paying interest to a person that is not a bank. So the critical condition will be whether the recipients, the person receiving the interest income, is taxable. For 2D, okay, 2D, it will be bank interest payments, okay, bank interest payment. The critical issue will be the critical condition would be whether there is a deposit pledge for the loan. If the deposit is pledged, doesn't matter if the interest income is taxable, the interest payment would be deductible. Then it would be section 16(2)(e). 2(e) will be the loan must be for financing, wholly for financing either trading stock or plant and machinery. If the loan is not if it is not 100%, okay, financing plant and machinery or trading stock, then you cannot claim this. Then section 2A and 2B, okay, very important restriction. 2A meaning whether the deposit, okay, the interest income is taxable. Okay, basically we call this secure loan test. Okay, we call this secure loan test. Whether it is secured by a deposit. Then section 16(2)(b), okay, 2B will be whether there is an inflow, nothing to do with security, whether there is an inflow back to the interposed person. Now then we have the redevelopment cost, okay. Now remember that interest on redevelopment, the keyword will be redevelopment. You have a building, you need to redevelop, okay. So you are borrowing money to redevelop the property. The interest must be capitalized. The interest must be capitalized. So we need to quote two cases, Wharf property case and secant case. Now Wharf property case would be the property for rental. Okay, when after redevelop, okay, Wharf property case, the property must be for rental. Secant case for resale. Okay, for resale, two different things. Now Wharf property case, if you capitalize, okay, into the property cost, okay, there is nothing that you cannot put into the income statement. You cannot expense. What happened is after the redevelopments have finished, the properties will be ready and you will derive rental income. Then you will claim your CBA. Okay, so the interest will be part of the property cost for you to claim CBA. Now for the secant case, okay, secant case you need to capitalize into the cost of property. Now whenever you can resell the property, the interest would be expensed into the cost of properties. So you can bring the interest to the income statement upon your resale. So that is the difference. So interest on non-financial institution and related to debenture very rarely, okay. Then we have the IBA and the CBA, okay. At least you need to tell me what is an industrial building, okay. There are six, okay. There are six criteria, six types. Now IBA, okay, some of you may not understand, okay. Even for the industrial building under section 40(1), what is industrial building? Now two of the major ones is, one is the research and development. Okay, if you have a property for research and development, you claim IBA, not CBA. Okay, if you are for manufacturing, it is also IBA. Anything other than the six types, that will be CBA. Now IBA, you have a 20% initial allowance. Okay, CBA you don't have, you only claim the annual allowance. By the time if you dispose the property or even the plant and equipment, you have balancing adjustment. So what is balancing adjustment? It is either a balancing charge or a balancing allowance, either. Okay? Balancing charge meaning that the sales proceed, okay, is greater than the residual value, okay, or the written down value. So causing you to pay more assessable profits, causing you to pay more tax. For the balancing allowance, it is the vice versa, okay, this difference, causing you to pay less tax. If you are not sure about allowance or if you're not sure about charge, just say balancing adjustment. Okay. Now for the deduction of R&D expense, it has already been asked under section 16B. So I will put this as a less for this diet. Yeah? Okay? So I don't go over this. Now for the patent again, it has been asked in June 2011. I will call this a less for this diet. And also for building refurbishment, okay? Building refurbishment meaning that you are refurbishing the property. It cannot be a domestic, okay? Cannot be a domestic building. Must be a commercial building. So the refurbishment, if it is allowed, you can only deduct 20% each year. But there are also two additional conditions. It cannot be first used by the taxpayer. Okay, if it is first used, it is not refurbishment. And the second thing is the refurbishment. The purpose of the property is different as compared to the original. After the refurbishment, you still cannot claim the expense. Now the prescribed fixed asset, it is about the computer hardware and software. Cannot be under hire purchase. Never can be under hire purchase. So we still got the environmental protection machinery and installation. Okay, this is new, never been asked. Completely new. Then we have the lease asset, section 39E has been asked already, so it's supposed to be less for this diet. Now we have the exchange differences, the financial instrument as well. We call this DIPN 42. It is also following the secant case. So exchange differences, whether it is capital or revenue. Okay, if you are paying a currency, okay, for example euro, on plants and equipment, then the exchange differences would be capital. If you are paying a currency on trading stock, then it will be revenue. Depends on the underlying transactions. Depends on the underlying transactions. Now we got the offshore funds. It is not that common, so I don't go through this. Section 20, transfer pricing. General anti-avoidance provision, I think it is a very common topic. Very common because we have so many DIPNs relating to transfer pricing. So you need to consider section 20 and also specific anti-avoidance provision. Remember, always quote section 61 and 61A. If Inland Revenue Department cannot tackle the taxpayer using specific anti-avoidance provision, then it will use section 61 and section 61A. So always quote these three together. Profit tax computation. You must have a standard profit tax computation in your critical file. Okay, I normally do a lot of work on the profit tax computation to remind myself. Okay, for example, okay, I will say you need to add non-deductible expenses, and I will think of what non-deductible expenses would you expect. For example, okay, penalties. Okay, penalties always non-deductible. Depreciation expenses you always have to add back. Donation you have to add back first. Okay, before you claim the 35%, right? So I always put this, and I will say less the exempted income. What kind of exempted income? Bank interest income, yeah, dividend income. I will do a preparation on the profit tax computation, and just in case if I have to do a profit tax computation, I will be very comfortable. Now, and also the DIPN 44, it is now very common, okay, for the DTA. Now for salary tax, okay, at least you need to understand the scope, section 8, bracket 1, DIPN 10, okay, whether it is a foreign, whether it is a Hong Kong. Now for the exemption, okay, the exemption is a very common topic, okay, it is either section 8, bracket 1A, bracket B, whether all the services are rendered outside Hong Kong, whether you can claim all the services. Section 8 bracket 1 big B, okay, we call this 60 days rule. Okay, 60 days rule, whether you are a visitor. Remember counting the days. Counting the days, we call this part of a day is a day. We don't consider whether the person is working or enjoying the holiday. We just say that, okay, whether this person enters into Hong Kong, part of a day is a day. Now, Section 8 bracket 1 big A and bracket C, we call this double taxation relief. This only applies to Hong Kong employment. It is not applying to non-Hong Kong employment. Now, then I will consider rental arrangement, but this has already been asked. Then I will call share option and awards. You really need to know share option. It's a very, very common topic. Okay, so you need to consider exercise dates, share options. If you are calling share awards, what is the difference between share options and share awards? If you don't know, you need to go back to your CLP. Now, awards, okay, you got upfront approach, you got back-end approach. What is the difference? What is the difference between vesting and non-vesting? Always ask you this. Personal assessment benefits, okay? Salary tax computation, I think this time will be less. Then tax administration, okay, must. What is the difference? Section 51 is taxpayer obligation. Section 52 is employer. If you are a company, you are like me, okay, ETC, okay, if ETC, I need to comply Section 51 and 52 because I am a taxpayer, okay, ETC is a taxpayer, but I am still also an employer. I got staff in my company, so I need to comply both, not only one. Section 51 and Section 52. Holdover has been asked for twice. I don't think this time there will be holdover again. Section 70A, it is not a common question. It has been asked, and you need to know the basis period. How do you calculate the basis period? DIPN 45 to 47, I think briefly only. I don't think you get a very big question on that. Okay, last, stamp duty, scope of charge. Okay, head 1 and head 2. Okay, remember, very important, group relief, section 45. Basically, under stamp duty, the most difficult will be section 45 group relief, and that's it. Okay, I don't think stamp duty is so easy. Okay, so just prepare a good answer. Is it okay? So, what happened is common techniques to pass QP. Prepare your critical notes, one set of notes, time yourself. You need to start practice and don't just copy. Now, by the time you finish your answer, remember to highlight your keywords. You can do this. I always remind my students to do this. You can actually underline, but don't underline the whole paragraph, okay? Just underline the keywords, okay? For the marker to mark, okay? It will be easier. So don't highlight everything. So basically, you got 1 month left, as I said, okay? What you need to do is you need to prepare your critical file based on past papers. If you join course, just do your mock, okay? Remember, every answer, you need to time yourself, okay? You must. No timing and don't type, okay? If you practice writing, no point typing, okay? Because I'm receiving some answers which is typed. It's no point, you don't type in the exam. You just write in the exam. So you need to write and time yourself, okay? And this is the final advice, okay, by HKI CPA, okay? So this is the last slide, okay? If you want to find me, just give me an email. If you want to go to the website for your final tip session, then go to our website, okay? If you have questions now, you can come up and ask, okay? The last one, thanks for coming, but you must, okay, must fill in the HKI CPA form. Okay, just fill in 5, good enough. Okay, so you can actually ask me questions if you want.